I think we've always been looking around about 80% of property in New Zealand, residential property is underinsured, but on top of that we've got 3% non-insurance.
About underinsurance and said it was a huge risk for the country, but nobody's ever shouted from the rooftops about it. It'd be really good to see the next government that comes in actually look at it and go, this is a real risk for our people.
We were talking about it yesterday, that what happens in the situation if there is an event, who pays for it?
Yeah, we pay for it in our taxes.
Yeah.
People should not be surprised when they go to the bank to try and upgrade their mortgage if the bank asks them for a rebuild valuation. They're becoming more and more aware of it.
Okay.
Because of what the Reserve Bank is saying.
Andy, welcome to the another Rebuild Confidence podcast.
Thank you, Brett. It's very nice to be welcomed onto the podcast. Thanks for having me.
Yes, it's my pleasure as well. Because you got given some homework the other day, and I'm sure you read it. Financial Stability Report, which was riveting. I got home, laid on the couch and read it, from the Reserve Bank. And for me, I guess what I got out of it, and it's a pretty big report, I think there's about 30, 40 pages, is they were talking about non-insurance. So there's a lot of properties out there that aren't insured. Mm-hmm. And I got the calculator out and worked out that it's 3% of non-insurance in the country.
Yeah, that's actually less than where it has been, because it used to be 5%.
Yeah, in the report, though, it does say that it seems to be getting worse, and especially in the areas where it's affected with slips and events.
So is that by choice, non-insurance? Is it just not being able to get insurance, maybe? It's a rhetorical question.
Probably a bit of both, but I'd say it's affordability. Mm-hmm. And, a lot of people in those areas, Hawke's Bay is one that's got hit a lot. They just can't afford the insurance.
Yep.
And we always talk about underinsurance. And then underinsurance, correct me if I'm wrong, I think we've always been looking around about 80% of property in New Zealand, residential property is underinsured, but on top of that we've got 3% non-insurance.
Yeah.
And then we were talking about it yesterday, that what happens in the situation if there is an event, who pays for it?
Yeah. We pay for it in our taxes.
Yeah.
The government need to cover for that. We live in a Western country and the government cover for that. They shouldn't, in my opinion. I think everybody needs to look after their own properties, but the government do it. I think they pay out for the land value.
Yeah, right.
And that's what they did down in Christchurch when the earthquakes happened.
Yeah.
And people had the liquefaction and they couldn't rebuild in the areas, so they got land value. If they weren't insured.
Yeah.
When we did have the Christchurch earthquakes, unfortunately, we became quite financially wealthy as a country, because all that money came from overseas, and it was a huge cash injection into New Zealand, which made it feel as if the economy was booming, but it was injections from overseas. So if everybody's insured properly, that injection does come into the economy.
Yeah. In the report, it talks about high insurance penetration supports financial stability.
Mm-hmm.
So in layman's terms, what does that mean?
I read it as that when we're in recessions, like we are currently coming out of one at the moment, or when the country's in a bad way, that people won't take insurance out because it's the cost of it's prohibitive for them.
Yeah.
So it just means that there's less people actually covered. That's how I read it.
Yeah, I read it that way as well. And I wonder if the soft market that we've got at the moment helps to alleviate some of that as well, because the premiums haven't been going up as high as what they were, 5 years ago.
Yeah, I think you're 100% right with that, Brett. I mean, the average cost in this report for insurance, it's saying the average cost for domestic buildings is about $2,900, which sounds about right. Now, the buildings insurance, the increases over the last couple of years haven't been anywhere near what they have been in the past. So maybe at the moment, because we've got that recession and we've got the soft market, maybe insurance is a bit easier and attainable for people.
Yeah.
Maybe we've got that crossover at the moment. I don't know.
Probably the sweet spot.
Yeah. We've said before that there's a hard market coming.
Yeah.
With the insurers, a couple of insurers putting their pricing up which will make things a bit tighter, does that mean that less people will have insurance? And I think that's what the Reserve Bank's trying to talk about at the moment, is that uninsured, are people more likely to be uninsured then because the cost of it's prohibitive for them to be insured for their property?
Yeah. I mean, that in the opening title, it goes, affordability, underinsurance and insurance retreat from areas exposed to elevated flooding risk indicate financial stability risks may increase. It's the areas that are at risk that are the ones that are actually not getting the insurance.
And how do we deal with that? I mean, I agree with what the insurance companies have done, and they've geospatialed people around the country and said, where you live's a lot riskier than where I live.
Yeah.
So you'll pay more money than I do. I'm not saying that that's a fact, but that's generally what they are doing. I know that some of the big insurers, the direct insurers, have got really amazing AI doing that for them now.
That's right.
And it can pick it right up. You and I have been to a couple of presentations and watched it, and some of it's just phenomenal. And they can pick it right down to a set 100 square metres. Yeah,
they're looking at slip risks and flooding and so forth. And a lot of that is if in the event of an event, they won't rebuild there.
Yeah.
They'll relocate them.
Exactly.
And if they don't have the adequate amount of insurance, they're still going to get the value of their land.
Well, according to the sum insured, you'll get paid out because you can't insure your land.
That's right. Yeah.
That's why you need to get a broker. Speak to a broker, get a professional person to speak to you about it. They know what they're talking about. They know they're dealing with this every day. They'll walk you through and get you the best cover.
I guess another thing that I got out of the report is the Reserve Bank are actually looking at this at the moment, which is a good thing, because it was about 4 years ago I approached the Reserve Bank and they were more interested in life insurance impacts and so forth at that time, but the FMA have been put in place since then, and so it's actually quite good that they're actually looking at that non-insurance and underinsurance.
I've sat in front of the Reserve Bank. I presented to them. They came out with a report in 2015 after me sitting in front of them about underinsurance, and said it was a huge risk for the country. But nobody's ever shouted from the rooftops about it. It'd be really good to see the next government that comes in actually look at it and go, this is a real risk for our people.
Yeah.
Not just, well, it's everybody else's problem. It is our problem, and it is, but let people, there's a way of getting everybody on board with it, and there's a way of doing it, making sure everybody's got the right cover. So the banks, like the big banks in the country, all the banks in the country are starting to talk about underinsurance, and they're getting stuff from the Reserve Bank. They're listening to what the Reserve Bank are worried about. When I lived in the UK, which was a long time ago, which is why I'm surprised we haven't got it here. A bank could go on and see if your house was insured, and we haven't got that here anymore. We used to have it. We have done a lot of rebuild valuations for banks and for people getting new mortgages. So one thing that people need to be aware of when you are getting a new mortgage or you're renewing your mortgage, your bank now, there's a good possibility that they'll come and ask you to get a rebuild valuation because they want to understand that you're insured properly.
Which is a good thing, because we've been talking to banks for years, and we've done some sampling for them. And am I right in saying that they generally, they used to get involved in insurance? They don't do that anymore, but they assign an insurer to their customers?
They've got, so I know the big banks sign up with some of the big insurers, so they go partners with the big insurers now. I know that Westpac, ANZ, and they all change. They've recently been some big changes in it.
Yeah.
But I think that they're getting more and more involved. We're talking to them a lot more. They're very interested in what we're doing on the underinsurance market.
Yeah, I mean, that's good. A couple of years ago, we did a big sample for a bank and through an insurance company.
Yeah.
And the data that we come up with is quite damning. So, I mean, that's a good step forward if that's the case.
It is a good step forward. They are starting to realise that their customers are potentially underinsured, which is a big risk for them as well.
Yeah, because historically they're just based on the land value, don't they?
Mm-hmm. And that loan to value ratio is coming right down because the decrease in people's property values.
Yeah.
So it could be less than the 20% buffer that they've had before.
Okay.
which means that they actually need to make sure people are insuring their properties, because some of that risk will be falling back onto the banks and not just with the customer.
Awesome. Thank you, Andy. That's sign off for the latest podcast. And like you, I'm going to be looking forward to the next one. Legitimately.
Awesome. And it's goodbye from him, and it's goodbye from me.
That's an age thing.